When it comes to our money, having the right strategy and plan is essential. A plan that is able to determine risk versus reward. A strategy perhaps to deal with some of the unforeseen market corrections because of COVID-19. That's what we're discussing today with John Boswell. He is the president and founder of A4th Wealth Advisors, a Charlotte area firm whose mission is to prepare people for successful retirement even during difficult times that we're experiencing. Hello, John. How are you doing? And John, let's just start right here. I want you to prognosticate for us from February to June and what that landscape looked like in the market. Are we going to see any more new market highs?
Well, first of all, if you go back and look at what's happened, I mean, we had a 35% sell-off, and many stocks since that time have come back 50%. Some have come back over 100%. So we had a meteoric rise, which is not congruent with fundamentals. So if you look at fundamental analysis and where the economy is, I would say the recovery is almost too quick. And if you're an investor out there, you need to be cautious about putting new money in or what stocks you're going to buy at this point in time. I will say it was positive last week. We had 2.5 million new jobs. But with that, we're starting to see new outbreaks of COVID-19. So I think that before we reach new highs, we're going to have a bumpy ride. Maybe over the next 3 months, could be 6 months. But long term, and this is where people need to think, Eugene, long term, if you look out 2, 5, 7, 10 years, we're certainly going to get to new highs. I really believe that.
So what does the Q2 earnings look like for us?
If you look at all the lost output of COVID-19, things were shut down starting, the end of March. So April, May, June, a lot of places were shut down completely. So I think that a lot of Q2 earnings are going to be very dismal, maybe some of the worst we've ever seen. But there are some companies, of course, that have done very well through this pandemic. So if you're an essential retailer or if you're in home improvement, those companies have done fantastic. If you are in travel or if you're in hospitality or if you're in a non-essential retail business, those earnings are going to be pathetic because, they're not open. They can't make money right now. They can't have any type of earnings. So in my opinion, from a macro perspective, Q2 earnings are not going to be great by any stretch of the imagination. It's probably going to be very bad.
So what about those people who've been on the sideline who have cash right now to go ahead and invest? Should they be investing?
Well, I think if you have cash, just remember, anytime that there's crisis like this, cash is king. So you want to be very cautious of how you employ your cash. Again, there are some companies that are actually thriving in this environment. Those are good companies to invest your money in, okay? However, after Q2 earnings come out, we could see a second pullback, especially if we have another COVID wave, which we're starting to see. There might be a great buying opportunity for that. So I would say be cautious with your cash. You may want to go in over time, not all at once. And a good financial advisor will help you navigate that to make good decisions.
So what other strategies can people employ to go ahead and get in that won't really cost them so much?
So, one of the strategies that we're doing right now with our clients is called a structured note or a buffered note. And it works on a 12 to 18 month maturity. So if you're out there listening, think about where the market's going to be 12 or 18 months from now, assuming we get past this pandemic, which I'm hoping we're going to. And if you look at 12 to 18 months out, I think the economy has a really good chance of really recovering. In the interim, it's going to be very, very bumpy. But the buffered note or structured note gives you a cap and a buffer. So the buffer might be, say, 15%. So if the market were to fall another 15% from now until maturity, you're not going to lose a penny. However, if the markets recover between now and the next 12 to 18 months, the cap could be 20%. So it's a very nice percentage gain on your earnings if the markets get back online, but it also buffers your downside. So for people that are all in cash and earning nothing on their money, this is a way that they can tiptoe back into the markets and be protected on the downside, which I think is very, very important given all the uncertainty we have today.
Are there any other suggestions that you have for our viewers?
I would say have a comprehensive plan. So many people I talk to don't have a plan. They might have bought some stocks or bought some safe money annuities, but they don't have an overall comprehensive plan. Maybe they haven't mitigated against long-term care risks. There's just so many things that when I say have a comprehensive plan and have a long-term perspective, and then find somebody that you can trust, find somebody who's a fiduciary, someone who's obligated to act in your best interest. And then if you stick to your plan long-term, I think you're going to be just fine.
Well, thank you, John. For you at home, if you'd like to learn more about preparing for a successful retirement, A Fourth Wealth Advisors has a great offer for you. For the first 5 callers with a portfolio of 250,000 or greater, they are offering a complimentary, full-blown retirement plan just for you. John will sit down with you personally, and he's going to provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement, a game plan to get you where you need to be. The telephone number is 704-509-1141. That's 704-509-1141. Give John a call. John, thank you very much, sir.
Thank you, Eugene. You stay safe, my friend.